The Federal Coalition and Opposition Pakatan Harapan Coalition inked a bipartisan memorandum of understanding on political transformation and stability, says Prime Minister Datuk Sri Ismail Sabri Yaakob. While details are scarce, Ismail Sabri in a statement said the historic collaboration introduced by the government would ensure outstanding governance in battling COVID-19 and economic recovery. The MoU underlines 6 key areas, namely strengthening the COVID-19 recovery plan, administrative transformation, renewal of Parliament, independence of the judiciary, Malaysia Agreement 1963, and formation of a steering committee. Earlier today, during the royal address for the latest parliamentary session, the Yang di-Pertuan Agong decreed for politicians to set aside their quarrels and to practice consensus democracy, which could soon shape a new political landscape and bring forth transformations in the nation's administration system. The MoU raises hope for a political ceasefire between federal and opposition political coalitions for Malaysia, which had seen 3 prime ministers in the span of 3 years due to political instability, triggered by party hopping and withdrawal of support from parties. The nation is still struggling to deal with the onslaught of COVID-19 and a narrowing window to spend more to address its impact on the economy and livelihoods. Meanwhile, Malaysia may not see JE15 until August 2022 at the earliest, as one of the details underlined in the MoUs for Parliament not to be dissolved from now until July 31st, 2022, according to a tweet by PH Communications Director Fahmi Fadzil. The Lembah Pantai MP also said that a copy of the MoU will be uploaded to the Parliament's official website on September 14th. Scientex has proposed to acquire all the remaining shares and warrants of Daibochi it doesn't already own at an offer price of RM2.70 per share and 32 cents per warrant. This comes to 345.3 million in total. Scientex, a packaging manufacturer and property developer, explains that the proposed exercise entails buying 38.12% of the total issued shares, sans treasury shares, and 95.75% of the outstanding warrants. Scientex does not intend to maintain Daibochi's listing status. The offer price of RM2.70 represents a premium of 13% over Daibochi's last traded price of RM2.39, while the 32-cent offer price for the warrants represents a premium of 60% over the last close of 20 cents. Scientex says that the acquisition will enable greater flexibility to implement strategic plans for the enlarged group to realize long-term growth potential in the flexible packaging industry. Scientex's CEO Lim Peng Jin says the challenges presented by the COVID-19 pandemic highlight the growing need for companies to be agile and react fast. He adds that to ensure uninterrupted supply to customers, it is crucial to future-proof Daibochi's capabilities through implementation of risk mitigation and business continuity plans that are integrated with Scientex's resources. Scientex says Daibochi will also be able to leverage the larger scale of its manufacturing facilities in Malaysia, Southeast Asia and the US, putting it in a better position to meet the stringent requirements of MNCs. Scientex intends to finance the exercise through a combination of internal funds and bank borrowings and hopes to complete the transaction by the 4th quarter of 2021. Trading in both counters was suspended today and will resume tomorrow. Vermaz Auto saw its first quarter FY22 net profit improve by 11% to 10.27 million, despite revenue declining 28.5% to 320.8 million. Vermaz proposed a dividend of 0.5 cents per share. In its boss filing, Vermaz says that the drop in revenue was largely due to lower sales volume registered from its Malaysian operations as lockdowns affected the industry. Showrooms were not allowed to operate for 2 months since June 2021. The higher net profit was due to the lower share of loss from associate Mazda Malaysia, coupled with the group's cost-saving measures. The group pointed out that car dealers have posted total losses of more than 14 billion in June and July due to the sharp plunge in sales of vehicles thanks to lockdown measures. Going forward, Vermaz feels that the outlook for the automotive sector remains volatile and uncertain despite the gradual reopening of the economy, adding that the industry is dependent on the containment of the virus and progress of vaccinations. It anticipates that the performance of the group for the coming quarters to be challenging and uncertain. UMW Holdings posted a 352% leap in automotive sales to 9,512 units in August after operations resumed following the easing of the full MCO restrictions. In a statement, UMW said both UMW Toyota Motor and its associate Putrajaya registered improved sales even though operations at its showrooms and assembly plants only resumed on August 16th. Year to date, UMWT sold 38,085 vehicles as of August, 20% higher than in the first 8 months of 2020, with the Vios, Yaris and Hilux continuing to be its best-selling models. For the first 8 months of 2021, Putrajaya delivered a total of 104,933 units, 12.5% lower than what was reported during the same time last year, mainly due to the prolonged FMCO. Consequently, Putrajaya has revised downward its target for 2021 to 214,000 units from 240,000 units announced earlier after taking into account the global semiconductor chip shortage, which Putrajaya has managed to secure to ensure uninterrupted production. President and Group CEO Dato' Ahmad Fuad Muhammad Kanali says that UMW expects the automotive sales momentum to continue for the remainder of the year, especially with the extension of the sales tax exemption to December 31st. Symphony Life announced the removal of its CFO Ng Ying Ying in a boss filing today. This comes as the group's single largest shareholder, Muaban Lee Group, last month called for an EGM on September 23rd to remove 3 directors and replace them with 3 others. In a notice to shareholders, MBL said it disagreed with the ongoing directors on the direction they were taking the group. Symphony Life reported a net loss of 13.6 million for the first quarter of FY22, compared with a net profit of 6.13 million a year earlier. This was partly due to the recognition of losses arising from the outcome of arbitration for its Arata at Bukit Tungku project of 4.5 million. Revenue, however, rose 17% to 35.6 million thanks to better sales at the group's projects, namely Union Suites at Bandar Sunway, Amajaya Sungai Petani and Tijani Raja Dewa projects. On its prospects, Symphony Life said the market environment is expected to continue to be challenging and demanding, but welcomes the recent relaxation in containment measures as vaccination rates reach 50% of the adult population.